Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so I am recording this on Friday, March 29th. The market is closed, opening again on Monday, April 1st. And AMC did close on the day on the week at a price of $3.72, being down more than 14% on the day and continuing down in the after hours just a little bit, just by a penny. And this is on the news that AMC has sold $250 million in stock, raising some capital. So, that is the reason why the stock price is down. And I must say, before I get into the chart, we did have a little bit of forewarning about this. Not only during the earnings call, Adam Aron talked about raising capital, how cash is king, and that it did save us last year. And then he did put out this tweet on March 25th. And in this tweet, he did say, as I have said before, cash is king. So we did have a little bit of a clever warning there. But before I do get into the chart, I'm just going to read this tweet from Adam, and then we can get into some of the levels that do stand out to me. And so Adam writes, "The impressive forthcoming movie slate gives me increasing confidence in the potential for a solid industry box office later in 2024 and in 2025. But the first part of 2024 is just a slog to wade through, given that the 2023 strikes delayed movie releases from early this year. As I have said before, cash is king. The smartest thing AMC did to survive during these past 4 turbulent years was to make sure we had corporate oxygen available to us. That oxygen for AMC, of course, being cash in the bank. As noted during our last earnings call, AMC is focused on extending our debt maturities and ensuring that our cash reserves remain robust. This is the recipe for success, and I also do think that this is a recipe for exploring future endeavors, such as, like what we have done with popcorn, as well as with Beyonce and Taylor Swift. I think there's a lot of great potential for us to be exploring and expanding the company, so I don't think this is bad for the company long term. And given that he says later in 2024, 2025, I do think that we have a wait, but I think this is a great opportunity for us to be picking up more shares on a dip, potentially at a double bottom, as we did cross below but did not close below. This red line here marked at $3.67. That is the lowest close of all time, which was hit on February 5th, getting a close at that level and then getting a bullish engulfing candle the following day before this nice move up. And so right now, not looking so good as we are down, but we could have closed lower. And I think a key level that we will want to look for is a close at or below $3.58.5, which was the low hit on February 6th when we did form this bullish engulfing candle. If we do get a close below that, I do think that will suggest further downside. And considering that we are in this downtrending channel marked by these 2 parallel white lines, we could still be respecting the base of that channel, but price could be going lower, so do keep that in mind. It is quite possible that we do see $3 a share, but just like $3.58.5 was a great dip buying opportunity before a nice run up, going up almost 40% here. And so if we do see a return to that level or lower, that could be a great dip buying opportunity to accumulate some more shares. But I do think it is good to be thinking about this big picture long term, like towards the end of 2024 into 2025. This could be, a great opportunity to be accumulating cheap shares. Also, while I do have it zoomed out, I did want to point out this shaded downtrending channel that we've been in, really residing in the lower half, the red, or the upper half, the blue, over the course of the year in 2024 thus far, and we are in the upper portion of that channel now. So I do feel that it is quite possible that we do visit the lower half of that channel, but again, like it was over here and over here, that could be a great dip buying opportunity before rallying up. So I do think it might be good to be patient, to wait for even cheaper shares, but this could also be forming a double bottom right around current price. So we could be seeing some upside into the month of April. So do look forward to that, but also brace for further downside. Prepare for that, as it is quite likely we will be going lower. But we do have some levels to the upside to keep an eye on. One being this blue line that I have marked here at $4.07. That was the low hit on March 27th before we did gap down following the news of the raising capital by selling shares. So that is a level we will want to return to, but I would expect there to be some resistance there, as some who bought here may want to offload shares at that level. So, it may be short-lived if we do get up to $4.07. Beyond that, I do have this orange line marked at $4.12, which was the low hit on March 4th. And so, that would be a great level for us to be getting multiple closes above. And then beyond that, I do have this yellow line marked at $5.10. That was the previous high in this little run-up that was hit on February 28th. So, if we can get multiple closes above that level, I think that would suggest further upside, and by the time that we do get up there, we could be breaking out of this downtrending channel. So that could be, a pretty important level, maybe around the end or middle of April. Perhaps we will be getting up there. But if not, if we do end up going down further to the downside, I would just keep an eye out for multiple closes below $3.58. If we do get two closes below that level, that could be confirmation that the price will continue that downtrend, but that could just be great dip buying opportunities. But before I do close this video, I did want to remove these drawings and then look at the chart briefly on the weekly, monthly, and quarterly time frames, because we are now in a new month, new quarter, and starting a new week, of course, next week. And so here, looking at the weekly time frame, I did want to point out that while this is not the lowest daily close, $3.72 is the lowest weekly close. So it doesn't look so good there. But again, we have not confirmed breaking below $3.58.5, which would be not only one close below that level, but a second closing below that new lower low. And so we haven't done that yet, so we could very well be forming a double bottom. So do keep your chin up about that. I am trying to, although this is fairly discouraging, but I do think this is great dip buying opportunities, great accumulating opportunities for the long-term investment that, this has become. And, I believe in the company. So, this is a great thing that we are experiencing, discounted shares. So try to keep that in mind. And then looking at this on the monthly time frame, one thing that doesn't look so good on the monthly time frame is if we do look at the close for the month of February, that was at a price of $4.32. But then for the month of March, we opened 2 cents higher than that at a price of $4.34. And so that does mean this is a bearish engulfing candle for the month of March. So that could suggest further downside, but again, we have not confirmed getting multiple closes below the all-time low. So I think that is good. And then now looking at this on the quarterly time frame, this could be, suggesting that unfortunately, this consolidation that we're seeing, it might be, bearish consolidation, as we've seen up here, consolidation to the side, and then a big move down, going down over the course of the third quarter of 2023. We did go down over 79% in that quarter, but, this could also be near the bottom. And so I am hoping that for this coming quarter, the second quarter of 2024. I am hoping that we see a big green candle bringing us back up to prices that we saw in the third quarter of 2023. That will be bringing us back to like $38, $39. So hopefully that happens. But if it doesn't happen in this coming second quarter, maybe the third or fourth quarter of 2024, as Adam Aaron has suggested, that we are looking stronger towards the end of the year and into 2025. So, hopefully there is some hope there. But, in the meantime, I just keep an eye out for these levels. Hopefully we don't start closing below this downtrend. Hopefully we don't get any closes below $3.67. And hopefully we are not putting in any closes below $3.58.5, and that we are seeing a double bottom. So I am hopeful for that. But, in the meantime, if we do hang out down here, I just plan on accumulating slowly over time, and I am fine with that. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.